Good morning and welcome to the CHAARAT Gold Holdings Limited H1 2022 financial update. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to Michael Fraser, CEO. Good morning to you, sir.
Good morning, and good morning to everyone who's joined us this morning to our H1 results for 2022. Today I am joined by our Chief Operating Officer, Darren Cooper, and our Chief Financial Officer, David McKenzie. Darren and David will assist me through the presentation. I'll just draw your attention to the disclaimer on page 2 of the presentation. In terms of the overview for today, I will provide an executive summary. I'll then hand over to Darren, who'll provide an operating update. David will provide a financial update, and then I will close with an outlook ahead of Q&As. We have received some questions ahead of the meeting, and we will address those at the end. In terms of just starting with a bit of the macro issues affecting us as a business, one of the key catalysts, as everyone would appreciate in our portfolio, is the development of our Kyrgyz assets. One of the key catalysts for moving ahead with those projects was the resolution of the dispute between the Kyrgyz Republic and Centerra. That was announced on the 29th of July. And that was really important because that really was one of the very key things for us to re-engage on the financing of our Tulkubash project. We've been very active even over the past 12 months, but certainly the feedback we've had is that was one of the key catalysts for re-engagement. And we're certainly moving ahead now with the financing discussions on Tulkubash. Just to remind everyone, Tulkubash is a ready now construction project. We also announced the metallurgical testing results of our Kiziltash project 2 weeks back, and we are very wanting to move ahead on the further development and progress the studies around Kiziltash, because that's a very significant development opportunity within our portfolio. But in terms of phasing, Tulkubash remains the first priority for us. The second macro issue, affecting us is certainly the war in Ukraine. This has had an impact really, and you would have seen this across the industry, impacting supply chain. There's been cost impacts on particularly on the input commodities into our region. We continue to monitor these developments closely. There hasn't been an impact on physical supplies, but certainly prices have been impacted. And the other thing that David will talk to a little later, in particular, is this impact of the appreciating Armenian dram against the US dollar. And as you can appreciate, this is a very artificial impact, largely resulting out of this war in Ukraine. And it's probably one of the only very few currencies in the world that is actually appreciated against the US dollar. That obviously has margin compression impacts, which Dave will talk to. Again, we believe that this is a fairly artificial impact, and it should normalize in time, but again, impacted by this conflict. I think the other thing that's really interesting that's happening and is there's also, gold remains reasonably strong. There's been some volatility. But again, gold market remains buoyant. We also do believe that there's future upside to come, particularly as additional pain gets felt through the equity markets. In a similar vein, though, there's certainly been, with rising interest rates, a migration to safety. And gold equities, particularly in the junior mining sector, have been trading down to significant discounts to underlying value. You would have seen in the past 12 months, the junior equities probably down nearly 50% against their highs. And even in the AIM, the general AIM market is down nearly a third over 12 months. We certainly think that that's a reversal that we should anticipate in time. I've been engaging with a lot of institutional investors. They're certainly not seeing a lot of new liquidity in their funds at this point in time. But I do suspect that there will be a risk on mood that will emerge once everyone sees the stabilization of interest rate rises, and that will certainly see money flowing back into the sector. So certainly for current investors, this has been a bit of a rocky road over the past 12 months, but it's certainly not unique to us. Just going into the H1 2022 overview, just on the sustainability side, I think tragically we reported a fatality of an employee of one of our contractor companies in May of 2022. And tragically, we had a second fatal incident involving a CHAARAT employee on the 3rd of September. This incident is currently being investigated, and Darren will certainly give you an overview and an update on the work that we are doing to create a safe and injury-free workplace at Kapan. Our overall injury rates are 0.74 versus 1.4 in H1 2021. So overall, the trend's in the right direction, but we certainly cannot be satisfied when not everyone can go home safe at the end of their shift. The other material piece of work that's underway for us in the sustainability front is the improving of the seismic stability of the Gegnoush tailings facility. Work is progressing as per planned, and we have allocated capital for the ongoing improvement in that facility. The last item is that we continue to look at energy saving initiatives, and we are working for carbon reduction initiatives in our mine at Kapan. And this particularly relates to things like, potential electrification of fleets and other energy saving initiatives. And we'll provide more information on that in the future reports. In terms of group financials, revenue was up, so we did benefit from some tailwinds of higher commodity prices in the first half. You would see there's been a little bit of volatility post the year end, but we are seeing some recovery, and particularly in the industrial byproducts like copper and zinc. That obviously also was helped by higher ore sales from our own product. You'd see our group EBITDA in the H1 was $4.9 million. That was down fairly significantly, about 50% compared to H1 of 2021. And that was largely due to some of the movements in costs in the first half, as well as the material movement in the AMD versus the US dollar. And David will provide further color on that later. At 30th of June, our cash and cash equivalents are $6.2 million. This was down versus December of 21, and that was also due to continued expenditure on development activities. And our net debt increased up 12%, largely due to the utilization and drawdown of cash. But David will also provide an update on what our actual overall debt profile looks like, because we continue to pay down the acquisition loan at Kapan as well. Just going into Kapan in a little bit more detail, our Kapan production was at 30.6 kilo ounces gold equivalent. This was 23.9 kilo ounces from own ore and versus 33 in H1 21, and 6.7 from third party ore versus 7 kilo ounces in H1 21. And we did speak in the quarter report around some of the outages that we took in the first half. So Darren can provide a little bit more color on that. On the adjusted EBITDA, that was 8.1 million, down 41% versus 13.8, largely again due to cost pressure and the impact on currency. Cost, all-in sustaining cost was 1,420 versus 1,063, and that's again due to the strengthening of local currency and cost inflation. In terms of third-party ore, remains a key part of our strategy to fill the mill. That continued strongly. We had 63,000 tonnes versus 70,000 tonnes in H1, and that contributed 1.7 million to adjusted EBITDA. Darren will also talk to the development of the East Flank. This is a critical piece of work to increase the reserve and future life of Kapan, and that work continues to progress well. In terms of Tulkubash and our Kyrgyz exploration, we updated our resource and reserve estimates in May 2022. This showed a 13% increase in our ore reserves at Tulkubash, and that was based on our 2021 drilling program, and that it was on the basis of a $1,600 gold price. This year we continued our exploration program during the summer period and progressing as per budget and schedule. And the focus of this year's work is really looking at the entire exploration potential of the wider license area. And this is about looking to extend the potential horizon of our Tulkubash project. In terms of Kiziltash, and as I mentioned earlier, this is a significant resource in our portfolio, and for our shareholders, this is the real long-term prize on our internal development options. It was really important that we continue to progress the studies on Kiziltash, and we this year have been focusing on the metallurgical test of the ore. We sent around 3.4 tons of our core that we drilled from our 21 drilling program that was sent to SGS Lakefield for testing. We expect to have full results probably later in September, but what we did announce, and you would have seen that we have released a report that shows us that the initial findings are indicating very strong recoveries from alternative processing routes. And that is really good news because that really opens the pathway for potential lower capital and operating cost options, including potential technologies like Albion. So that was the initial results on that is really positive. Just to again bring this together in the summary of what we have today. We have a business that has a producing mine in Armenia. We produce a copper and zinc concentrate and report in gold equivalent ounces of around 60,000 ounces a year. Our life of mine average EBITDA is around $20 million. And whilst we have, fairly low reserves reported, what we always say is that this is a mine that will continue to drill out and develop as and when we require to give us the right horizon. And that's where things like the East Flank come into it. But there is significant resource that's recoverable from this mine. In terms of our internal growth options, we've got the two-phase development of our property in the Kyrgyz Republic. This is what we call stage one is our Tulkubash project. This is an open pittable heap leach project, initial life of around 7 years. But what we are looking to do is extend that horizon because there is, further targets within that strike zone. And the intention is that would be an initial production target of around 95,000 ounces of gold equivalent. Underneath Tulkubash, and this is where the significant value sits, is the Kiziltash project. This is a 5.4 million ounce sulfide refractory ore. And we think that this would be able to deliver a 300,000 ounce operating asset for up to 20 years. So a very significant resource in a geography that we have, spent a lot of time working on. And there's been a lot of work in really establishing the footprint. And for those that are watching the video, you can see the photo behind me is actually the area that we're operating. And you can see a number of the access roads have been built in, and in the bottom of the valley, we've got camps have been developed. So we are ready to develop Tulkubash once funding is in place. So from an overall growth pipeline, you can see our Kapan mine producing on average 60,000 ounces of gold equivalent. Once we add stage 1 of the development in the Kyrgyz Republic, which is Tulkubash, gives us around 150,000 ounces of gold production. And then you add Kiziltash to the latter part of this decade, and you've got 450,000 ounce business. In addition, and I don't want to lose this point, is that we do believe that there are a lot of mispriced assets in the sector, and there are a lot of opportunities for further consolidation. And we think those opportunities will continue to evaluate and add those in a way that would be value accretive for our shareholders. So that's an overview of our growth story. I'll now hand over to Darren for the operating update.
Thank you, Mike. So as Mike mentioned, we did have one fatal injury in H1. This was related to an individual that got struck by a piece of loose past the area that had the roof guarding in place. An unfortunate injury which resulted in him passing away a couple of days after he was injured. We have also again had a repeat of that on September the 3rd. This one was related to drilling equipment. The individual got caught in the rotating the drill piece at the end. Came into contact with that somehow. We are in the midst of that investigation. Authorities are on site at the moment. I'm actually in Kapan overseeing the investigation that we have going on site at the moment. We will update more on that as we complete those investigations. So our condolences to the families of both individuals, and we will continue to work our hardest to ensure that such events do not happen again. Both incidents unfortunately overshadow the good work that is happening in Kapan. There is significant change since we took over the operation 3 years ago. The upgrades that have happened to the facilities, not the workshops, switch rooms, wiring, and other safety practices which have been brought in to increase the management oversight and the systems of the organization. There's a lot of workplace reviews done, procedures which have been developed, training which is being carried out, near-miss investigations, all incidents investigated. But we're still trying to work on changing those subtle cultural issues, which can often lead to those unsafe work practices, which we still have to resolve. And that's where our focus has been and will continue to be until we get this issue resolved. On the environmental front, I'm glad to report no environmental incidents. Everything is progressing quite nicely there. The levels of discharges from the site have dropped significantly over the few years that we have owned the mine, and are heading towards much better world practice. As far as the tailings facility, as Mike mentioned, significant work's been ongoing there. We are about 3/4 of the way through the buttressing work, which is going on the north wall. Once that is finished, we will move to the south. The activity for the rest of this year will focus on actually relocating the road to the Gaganush village, which is the other side of that tailings facility. As part of this buttressing, we effectively have to relocate that road to the new buttress and away from the side of the dam where it is at the moment. So that will be completed over the next couple of months. We will build a new road and then move to that and continue the buttressing work over the top of the existing dam. Just a few examples of the work that's happening in the area. A lot of social engagement, involvement, purchase of new equipment, stabilization agreements, and social engagement programs are very much an active part of our operation. With regards to the operating metrics, as Mike mentioned, we had a strong half with regards to the amount of tons mined, up at 6.5. Unfortunately, what we suffered from is lower grade in the areas that we have been mining, 12.2% down on where we were the previous year. We are in an area where the veins of the deposit are much smaller than they are in sort of some of the historical workings. and we are putting a lot of effort in at the moment to actually modifying all of our mining methods to be able to work on both the vein drives and the blasting patterns so that we can significantly reduce the dilution. A lot of test work is underway at the moment. In the last month or so, we've seen some very good results from that, and anticipating that over the next sort of 4 to 6 months, we'll be able to make some quite significant changes to our mining processes to better utilize the equipment and attack the veins that we actually have within the operation. So milling numbers are pretty similar year on year. We had a good operation in the mill. The recoveries are similar to what they were in 2021, but given the grade change, that's actually quite a good improvement in recovery. Recovery is very much driven by the head grades of what's going in. Third party, a little bit down on last year, but still very much in line with the 10,000 tons per month, which we were anticipating. So a little bit ahead of that. Last year, we ended up treating a little bit more third party because we were slightly down on some of our own ore. This year, with the increased production, we're able to get that more in balance, as we still make more money from our own ore than we do from third party. Third party is effectively a filler of the mill and just an additional revenue source for us. With regards to the all-in sustaining cost, 33% increase year on year. Primarily two drivers. We saw starting in last year from 2021, the commodity boom drove up a lot of our prices. All of our reagents, all of our fuel costs, steel costs for rock support, meshing, bolting, all of those saw a significant increase. Those prices are still high, and obviously we've seen on top of that a lot of the inflationary pressures around the world as well starting to flow through. We are basically going back and rebidding all of our contracts and working very closely with the local community and some of our international vendors to drive those prices down. And we are seeing some progress there. Our challenge now, of course, as Mike mentioned, is the 20% depreciation in the dram compared to the US dollar, which is adding even further pressures to us. So we are taking action at the moment around cost management and through the grade control to be able to reduce our costs and try and maintain a positive operation in these very unusual times. With regards to East Flank, work has been progressing. Underground exploration is very different to surface. It's not just a case of put in a quick drill pad and away you go. There's a lot of work that needs to be put into developing the actual exploration drives ahead of time. That's what the work has been doing in the so far this year. We now have 3 of the 5 drilling stations have been developed, and we will be starting the actual diamond drilling of those 3 stations very shortly. Expect to getting the first results back before the end of this year. Where this potential ore body is in relation to the existing Chamonix deposit, they are incredibly close, basically are connected through the existing workings. So as soon as we start to see good results, it does give us the ability and the options to bring some of those areas into production sooner than later. It's a 2-year program. We will continue drilling for that entire period, and this is only on a portion of East Flank, this 2 years. Once we've been able to demonstrate the resource potential of that area, we will then just sort of integrate that into the overall 60,000 meters of drilling that we do per year to add new resource into to cover depletion. So that work is continuing and continuing to plan. As already mentioned, we finished our 2021 drilling program last year. Those results have now been incorporated into the revised resource model and reserve, and gave us a 76,000 ounce increase, 13% overall. And we've also seen a slightly improved recovery model developed from that work, going in and looking at each of the zones individually and making sure that it was fully optimized. When we did a third-party review back in 2021, there was a few areas of the resource model where the independent third party raised a few questions. Those have now been all answered, and we have a very robust model going forward. As far as actual camp activities, those have been limited for this year. We've continued to progress on various work activities, but the amount of progress obviously has been slowed, and we are in a position where we are ready to move forward very quickly as soon as funding is in place, but we are effectively optimizing the cash out at the moment to make sure that we're in the best position ready when full funding is available for us. With regards to Kızıltaş metallurgical drilling, so back in 2016, there was a feasibility study done by Neren for the previous owners of CHAARAT. What we are trying to do at the moment is being able to validate that work and take it to the next level of really locking down what the processing option will be. So the metallurgical drilling that was carried out last year to give us representative samples of the two main ore zones in Kızıltaş, we completed that drilling last year, and most of the test work has now been completed. All of the mill indices, the flotation work has been done. POX and Albion has now been completed. And as Mike mentioned, the really good news there is that Albion is demonstrating almost identical overall recovery results to POX. And Albion offers a much lower capex option to be able to develop that process compared to POX. We're still waiting for the BIOX results. Those should be in within the next couple of weeks. And as soon as we get those, we will be in a position to then move forward and look at what the next steps for this project will be, including sort of an economic trade-off study so that we can determine what that sort of final processing option will be for us to be able to move forward. So with that, I will hand over to David, who will take us through the financials.
Thank you, Darren. As Darren mentioned, production was stable with 31 kiloounces AU equivalent produced in H1 22 compared to 33 kiloounces in H1 21. It should be noted that iron ore produced was down 10%, which did impact our AISC. Full year production guidance remains unchanged. Revenue up 5% in H1 22, when compared to H1 21, which reflected the stronger commodity prices, especially earlier in the year, and a higher volume of iron ore sales. The adverse EBITDA and AISC results were due to macro environmental issues, the strengthening of the Armenian dram and cost inflation, which I'll go through shortly. Should also be noted that was again the iron ore produced down by 10% does impact the AISC. Capex spend of 3.5 million in H1 22 was a significant increase on H1 21 due to continued investment in production assets. On the group level, we had 1.4 million operating profit in H1 22 compared to 7.8 million in H1 21. This was mainly due to increased cost of sales, which again I'll cover shortly. We have a reduction in cash as a result of continued expenditure on development in Tulkabash and operating activities. On the net debt, which I'll just cover shortly, we continue to have active management of the capital structure. The two big macro issues facing us were around inflation and the commodity prices and the AMD USD exchange rate. We had strong realised prices for metal sold earlier in the year, resulting in CHAARAT outperforming its targets for Q1 22. Prices did weaken in late Q2, which significantly impacted CHAARAT's half-year EBITDA, which is mainly due to a dip that you can see circled there when we repriced our open shipments at 30th of June 22. The commodity prices significantly increased at the beginning of the year, which resulted in cost increases in most raw materials. This had a cost inflationary impact on CHAARAT's cost of sales. This increase has been quite significant during the first half of the year, and we are hoping that the supply chain is going to deliver us new procurement strategies to take advantage of any opportunities led to by decreased demand and also the FX benefits noted below. We are seeing some of the prices come back off. However, it has been tough going in the first half of the year, which is the same for all mining companies globally, to be honest, at present. The AMD USD exchange rate has strengthened from its usual historic rate of approximately 500 to nearly 400 during H1 22, This is a 20% increase. This is mainly due to sanctions in Russia. Some likely causes were the increases of Russian nationals bringing in USD into Armenia and different currencies being used for payments of natural gas and other commodities by Armenia. This is really a direct impact from the Ukraine war, and it's something that's quite localized. It has been an impact for the last 3 months, and it's something that I don't think will go on for the long term. However, we are just having to manage things in the short term, and hopefully things will return back to normal to the 500 mark shortly. How it impacts us is the sales of concentrate are made in USD, with our majority of our costs paid in AMD. So therefore, COGS have been impacted by those FX changes. As at 30th of June 22, the AMD USD rate was 407, which when we added our revaluation losses being recognised at period end, that also had an impact on our EBITDA. CHAARAT is again looking to the supply chain to take advantage of FX savings, which can happen so that until the macro environment normalizes. As we look at our capital structure, the movements for the last 6 months, convertible bonds, we've had 1.8 million accrued interest. We have continued to pay down the Kapan acquisition loan with 5.6 million repaid, comprising 4.9 mil of the principal. And in the other, which is the 8.8, there was an increase due to prepayment being received from one of Kapan's customers in Q2 22. What's the outlook for our capital structure? Well, we have Kapan acquisition loan, a further 2.2 was repaid in July 22, so we're now down to 12 million, which is good because it just gives us the potential to refinance Kapan and look at trying to bring in some of the synergies mentioned before by Mike and the electrification of the fleet, and also to just give us some working capital power to take advantage of this currency situation due to gaining some of that flow through the supply chain from savings while they bring goods into Armenia. The convertible bond has a balance of 27.5 currently. We are discussing this with the convertible bond holders at present. We are currently coming up with solutions for the convertible bonds, and we look forward to going out and completing those discussions with the convertible bond holders in early October, and we'll update the market accordingly. On the Tulkabash project financing, discussions with potential project finance providers are ongoing. The Centera resolution was a really good kicker for us to be able to go out and actually re-engage with a lot of multilaterals and significant local banks, etc., to really move things along. And we really hope to come back to the market with an update on this in the next 6 months. An update will be provided on the revised project schedule once a final investment decision is made, which is expected in 23, which is obviously contingent on us having project finance in place. I'll now hand you back over to Mike for our outlook.
Thank you, Dave. So just in terms of outlook and the key things that are being focused on, firstly, Kapan is an important anchor to our portfolio and remains on track to deliver its full year guidance of between 56 and 62,000 ounces. In terms of Tulkabash, the resource and reserve update, we have now published that in Q2 of 2022, as Darren spoke to, and we'll continue with the general regional mapping of the potential. On Kiziltash, we published the initial metallurgical test results, and what is really crucial for us is once we get the final report is making an initial decision on the optimal processing route, and that will really set us up for the further studies of the project. In terms of Tulkabash, this is one of the material catalysts for our company and our stock is completing the project financing. And as I mentioned, the resolution of the dispute between the Kyrgyz Republic and Centera was a critical step for us to be able to re-engage, and we are now actively re-engaging with multilaterals and commercial partners, funding partners for the project financing on Tulkabash. We certainly would like to have that in play by the first quarter of 2023, to enable us to make the most use of the summer construction season. That would certainly be our ideal scenario. And that's a very key activity for us as a team. In terms of Kapan, and Darren spoke to the East Flank drilling program, that is, really crucial. We will do the trade-off study about how we see the East Flank fitting into our overall mine plan, and we'll provide an update as we continue with that drilling program. That's a key next stage development of the Kapan mine. And then on the corporate level, we also understand that one of the key catalysts for us is just talking about the debt, and particularly how we deal with our convertible notes that are coming due. And we are having, positive engagements with the convertible note holders around the right pathway on that. And we will certainly provide an update in the not too distant future around those note holders. And over time, as we grow our business, we certainly think there are opportunities for us to reduce the cost of capital as we add ounces, to potentially start looking at using our corporate facilities to move forward. So that's something that we'll continue to keep in mind. And in terms of, just the value accretion and the catalyst, to remind everyone, very much around, continue to operate Kapan reliably. Secondly, getting Tulkabash financing in place. Thirdly, dealing with the convertible bonds. And lastly, looking at opportunities to add value accretive ounces into the portfolio through acquisition. And again, just on, why invest in CHAARAT? We've got a really good, high quality operating team. There's a very well experienced board that supports us. We have a strong internal growth opportunity set, and we still believe there are huge opportunities for value accretive M&A to add to the ounces in the portfolio. What is really helpful is, as you would know, we have a strong shareholder base, and having a significant majority shareholder with strong alignment with management is hugely supportive for us. We also had a proven track record to attract funding. Clearly, this year has been a very unusual year from a market's point of view. A lot of liquidity has been lost, but that will turn, and money will flow back into the sector. And we think that would, at the right time, that would provide us access to do further things in the portfolio. And just from a valuation, we've seen, generally the sector has been hugely impacted. There's no doubt that, there's some contagion effect with our exposure in our regions. But from our point of view, we think that is a huge opportunity for relative outperformance going forward. If you look at the valuation of our stock today, we're probably trading at a fair discount to the value of Kapan on its own, ignoring the other opportunities within our business. So we certainly think there's upside potential, significant upside potential. I thank you for listening to us, and I'll now hand over to the moderator for the Q&As.
Michael, David, Darren, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just using the Q&A tab, which is situated on the top right-hand corner of your screen. I'd also like to remind you that recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Received a number of questions from investors pre-submitted and live, and I want to start off the Q&A session with this one, which reads as follows. What is happening with the share price? It's fallen to barely 3 times Kapan EBITDA, not including the lack of value from Kiziltash and Tulkabash. What are you going to do to turn the ship around?
Yeah, thank you for that. And hopefully I gave a little bit of a response to that earlier. Absolutely, we are very disappointed at the market response. I think we absolutely believe that the market is not really valuing our stock at the moment. what you will see is that, our stock remains fairly thinly traded. So these are off the back of fairly small volumes as well, which are having an impact. I think the general macro is affecting us. As I said, rising interest rates, there's definitely a migration to safe havens and risk off. And gold equities remains an area of once people start feeling there's a need to find alternative safe havens, gold will come back into vogue. And I've no doubt that once that does start flowing back and you see flows back into the sector, that our relative valuation would be attractive for new entrants into gold, and for those that are wanting to differentially access it. I think in addition, there's no doubt that the sector is positively impacted by positive news flow, and we do think the catalysts ahead of us, things like being able to complete Tulkubash financing, announcing a resolution on how we're dealing with our convertible notes going forward, potential additional M&A transactions. Those will all be things that will have a very significant impact on our price, almost disproportionate, but people do follow momentum, and we are very clear that within our strategy, delivering some of those will certainly have a positive impact on our price.
That's great. Thank you very much. Turning to the next question. Can you give a timeline update for getting Tulkubash into production? Funding has been just around the corner since May 2021. At what point should investors assume it's not possible to finance this project in this economic/political climate?
Yeah, no, look, I think, again, without being a victim in the space, the team had done a huge amount of good work in getting the Tulkubash project-ready BFS in place. This was significantly revised to global standards. It was off the back of JORC-compliant reserve and resource statements. And the team did a really good amount of work with a lot of design and engineering work gone into the project. There was a DFS was released to the market in May of 2021. At that time, the team were very active in engaging on financing, again, both with multilaterals and commercial banks. And then there was the dispute between the Kyrgyz government and Centera that emerged in June of 2021. Essentially, that lost us 12 months. No one really wanted to engage until they saw how that played out. And with the announcement of that resolution at the end of July, we are now actively re-engaging with our financing partners. And there's really good, positive interest, and people want to see investment back into the Kyrgyz Republic. I was in the country 2 weeks ago engaging at a ministerial level with the head of investment agency, and everyone is still very keen to see inward investment. And they recognize that they also need to do things to send the right signals that the Kyrgyz Republic is open for business, and that will certainly help our funding. But we did lose 12 months. There's no doubt about that. And, we remain very engaged to bringing this project into production, because, again, this is it would be a material catalyst for us as a company.
Thank you very much once again, Michael. And the next question, I know Darren has touched on it in the presentation, but we've had an investor ask, how is work coming along to extend Kapan's east flank?
Yep. So as I mentioned in the presentation itself, 3 out of the 5 drilling stations are now prepared. The contract has been signed with the drilling company, and they are mobilizing to start drilling within the next probably 6 to 8 weeks. They will be on site and drilling. We will get those 3 drill stations done. Whilst that drilling is ongoing, we will then complete the remaining 2 stations. So we expect first results to be back probably early in the new year. Obviously, there's a lot of drilling to do and a lot of results to then to build into a resource model before we actually have anything concrete to work on. But that's what the overall plan is looking like right now. So 2023 will be the year that we really know what is in East Flank. There's some good drilling has been done in the past from surface, indicative drilling, but this is really about bringing it up to a JORC standard.
Thank you very much for that. The next question reads as follows. How are the conversations progressing with the various loan note holders, and when do you expect to conclude these discussions?
Thanks for that. And maybe I'll just hand straight over to David, because I think, David, you probably are best placed to answer that.
Thanks, Mike. Conversations are progressing well. We've had interactions with all bondholders, getting their feedback and mapping a way forward. In terms of timing, we expect to conclude these discussions in early October. We don't want to leave this to the last minute, and we will be updating the market accordingly, which hopefully will be early to mid-October.
Perfect. Thank you very much for that, David. And the next question here is around the share price and asks, what catalyst can we expect in the near term for the share price?
Look, I think I've answered this in a couple of ways, but I think firstly there's macro, so it's generally risk on when people will start investing back into gold equities, and that will turn. I think this from our own internal opportunities, I think the first one is really getting financing in place on Tulkubash. Secondly, it's a response back that we have resolved the convertible note that are due in end of October. And then I think the third one would be if there's an opportunity for further M&A activity. And probably the last one is the continued progress of our Kiziltash study, because again, we shouldn't lose sight of the fact that this is a world-class resource within this portfolio, that we really aren't getting any value accreted to it because people don't see a pathway for development. And I think that's certainly something that is in our hands to continue to develop.
Perfect. Thank you very much. And the last question we have time for today is a question from Edward, who asks, is there any guidance on CapEx for accessing the East Flank and the plant upgrade that may come with this?
Darren, maybe you can take that. Thank you.
Yep. So our initial estimate for East Flank drilling over the next 2 years is roughly 3.8 million. That was based upon the normal historical Armenian dram FX, converting that into US dollars. That is only on the exploration portion, so the drilling and the exploration drive development. The actual CapEx that may be required from a mining equipment point of view, that will come out once we've actually finished the 2-year program, understand better what the resource is, understand better how we will actually mine that, either through existing access ways or via whether we develop a new adit into the mine to access those areas. So that will come out during the course of the exploration program as we flesh out what that resource is and how best to attack it. As Mike said, once we've done the other work, we need to step back and look from a strategic point of view of how best it fits in with the existing resource and how we want to develop that going forward.
Thank you very much for that. And Michael, David, Darren, thank you very much for addressing those questions you can from investors. And of course, the company will review all the questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Michael, could I just ask you for a few closing comments?
Yeah, thank you very much. Look, I think what we have presented today is a set of results that are, heavily impacted by macro factors. I think the one area that we absolutely take on board is that we have to continue to improve and focus on the safety performance out of Kapan. It's certainly not acceptable having had those 2 fatalities in the last 6 months. But we will do whatever it takes to drive a safe workplace, because that's the most important thing for us. We do have significant growth options in our portfolio. We continue to develop those and unlock the value that is not attributable to them today. But thirdly, this sector remains very ripe for consolidation. There are a lot of mispriced assets, and we think CHAARAT remains a very good platform with a strong set of capabilities to drive scale and growth. And I'd just like to thank all the shareholders for their continued support and for the great questions that came today. Thank you very much.
Michael, David, Darren, thanks once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of CHAARAT Gold Holdings Limited, we'd like to thank you for attending today's presentation, and good morning to you all.